Okay, welcome back. I'm Angelo Mancios, behindthevault.net, and this is our 10th podcast, and it's part two with Larry Hoover. We had such a great response to your podcast last week on the horrors of home insurance. Today we're going to talk about car and give everything out, get all the other miscellaneous items we missed. So Larry, welcome back. How you doing?
Great. Thanks, Angelo, for having me. This is fun.
Awesome. All right. Well, let's jump right in. So Larry is a P&C expert. He specializes in property and casualty insurance, so home insurance, car insurance. And in our last video, which we'll tag, we talked about the home a lot. So today I want to switch gears and get into the car. So I live in Brampton and I pay the highest amount of car insurance in the country. And if I actually drove 10 minutes south, my car insurance would drop about 30%. So talk to us about why car insurance is so expensive in Brampton. Everywhere generally.
No, you're absolutely right. And I tell everybody the 3 or 4 reasons why car insurance keeps going up. And the most expensive cities in Canada, 13 of the top 15 are here in Ontario. And the last stat I saw, the most expensive cities in the whole country, the top 6 are here in the GTA. So rounding out number 1, we have Brampton and Vaughan tied for number 1.
Sweet.
Yeah, and then we have Mississauga, Markham, Toronto, and Richmond Hill. So that's the order of most expensive areas. So the industry's it's kind of like life insurance. It's based on statistics. So they break down where the accidents are happening by postal codes. In the back office, it spits out, all right, well, you live here. So statistically, here's where we see most of these types of things going on. So that's the answer to the question in terms of geography and why is it so expensive where I physically live.
Now, let me ask you this.
This
as a follow-up. Do you think a lot of it has to do with population density? I mean, is it just we have a ton of people in the city, so the likelihood of getting into an accident is much higher? Or do you think there are other factors that come into play here that have nothing to do with unsafe drivers, demographics, weather, etc.?
Yeah, and there are usually about 4 categories of reasons why insurance is increasing on the car side. And number 1 of them is, to your point, is that there are more cars on the road every year and they're really not making any more roads. So there's your density issue.
Right.
Number 2, there are more accidents and more claims pre-COVID than before. But the number 1 reason why that is because distracted driving a few years ago catapulted over drunk driving as the number 1 reason of cause of accidents. Now, there's different ways to be distracted, and one of them is texting. As a matter of fact, I heard a police officer not too long ago say, we call those folks lappers because they put their phone on their lap, their heads are down, and they're texting, thinking nobody can see them.
Right.
Number 2, the entertainment systems in cars these days are very sophisticated things with push button this and that and so on. So that distracts us. And number 3, the actual phone calls themselves. Even if we're hands-free, it still can be somewhat of a distraction. So when an officer responds to a fender bender and sees that there's no skid marks, they pretty much know that somebody was distracted somehow. Repair costs are getting much higher. So long are the days where a new fender costs $500, $700. These things have electronics in them now. So that side view mirrors, there's a lot of technology in these devices now. So the repairs are going up quite a bit. The final reason, and this is relatively new, is that fraud has increased the cost of car insurance. It's estimated about $230 a year more. Each of us are paying each year because of people defrauding insurance companies.
Wow. I mean, it sounds like such a small number, right? Oh, it's a couple $100, but a couple $100, over 10 years is $2,000, over 20 years is $4,000. But you multiply that by 20 million drivers in Canada. It's a lot of money the insurance companies are collecting to offset these costs.
It is, and like anything else, it gets passed on to the consumer. That's you and I. So that's one reason why dash cams are selling so nicely in Ontario. But there's different kinds of car fraud. It could be the tow truck drivers. It could be the rehab medical places as well too, and other such services supporting those who are hurt in an accident.
Right. But not really that hurt. They're kind of hurt, but then it gets blown up, right?
That's
I
right.
understand. Let's go back to the distracted driving. I did a presentation probably about 7 years ago now at MDRT, and talked about the importance of holistic financial planning, where life insurance, critical illness, and your wealth products obviously have to come together like a Venn diagram. Back 7 years ago, the stats around brain injury were huge. So talk to me a little bit about some of the ramifications of, so let's say I'm a distracted driver and I've got somebody in my car, we get into an accident and they get hurt. Or I'm a distracted driver, I get into an accident and I really hurt the person that I've hit. What sort of money damages, like how bad can these really get?
Yeah, and that's a really nice segue into what are the typical things that you find in car insurance policies that are weak. And I would say the one with the greatest impact, to your point, is what happens if you're sued because you are at fault in a car accident. So the first bullet I wanted to mention on that regard is quite often I see the amount of money that people have in their car policies is too low if they are sued. The most common number that we see is $2 million coverage if you are sued. I do maybe about 20% of the time, I see people who have $1 million coverage if they're sued. So to give you some perspective, is we stopped offering $1 million in our brokerage over 10 years ago. It's just an old number. It doesn't mean as much today.
Right.
So the story that I've got to share with that, and unfortunately, it's not a very pleasant one, but I read about not too long ago where there was a fellow who's driving in a downtown rural area, suburban area, one of the cities in Canada, and he jumped the curb and he pinned somebody against a wall. And unfortunately, that person is in a wheelchair now. That lawsuit was settled at $3.75 million.
Wow.
So if you had $2 million liability on your car insurance and you would be sued, you are responsible for the difference of $1.75 million. That comes from you. So what that means is that Angelo gets a phone call and says, as client says, I'm sorry, Angelo, but I cannot make my monthly payments to you anymore. We have to stop because this just happened to me. Number two, you are told to now start to dissolve the savings accounts and the plans, retirement plans that these people may have had because they have to pay off their debt. They may have all the other properties that they have to sell. So once all that is settled and so on, if there's still anything remaining, they can have their income garnished for the rest of their life until that difference is paid off.
So it'll ruin your life.
That's what I tell people when I review their policies. We walk through the report on the liability line item. I say, they will read, you only have to be sued once to ruin your life.
So let me ask you this then. What's the difference in cost between, say, $1 million of liability, 2 million, and 5 million? Just
Uh,
ballpark. $20 a month, if that?
One of my companies will double it from $1 to $2 million for just $20 a year.
Right. So for
Right.
20.
Yeah, but however, to add on to the amounts of $2 million, because $2 million is pretty much the most that standard insurance companies will offer, the last couple of years I've been offering something called umbrella insurance.
Right. We
So
talked about this on last week, where
yeah,
you can piggyback off your home policy. So if you're sued, if I've got two on my home, two on my car, now I've got four between them all.
exactly.
Right.
So it acts as an umbrella protecting the other stuff. And it's a lot more meaningful on the roads because, as you can imagine, there's a lot more car lawsuits than there are on your house. So in this example, this poor fellow who was charged for responsible for 3.75 million, he would have had 4 million in the example you gave. He would be fine. However, the record for a car insurance lawsuit in Canada was $16 million,
Now,
which
I gotta believe the factor in that is like the person's ability to earn and what they do. Like if I'm a UFC fighter, for example, and I make millions of dollars a year fighting in the cage, and you take my legs out and I can't fight, my lawsuit's going to be a lot higher than if, let's say, I've got a $60,000, $70,000 a year office job where I'm sitting behind a desk all day long.
Exactly. That's right. So they do the math, they look at the precedent and case law across the country, and the two parties agree on something and they settle on something. So imagine if if you have $2 million liability insurance and you assume that you're properly protected and something like this happens to you, and then you find out that all these things have to occur in order to try to satisfy your debt. But I'm going to take it a step further, Angelo, and scare people even more.
Nice.
About 15, 20 years ago, in the middle of the night, I heard a thud against our house. We were living at an intersection in Oakville. Apparently, a 43-year-old father of three passed out behind the wheel and hit our house and bounced off it and through our backyard. He was okay. They discovered that he needed a pacemaker later on, but he had no history of having any issue with his heart. So that settled fine. The thing is that what happens if he hit one or more people? And if they were young people, he would have been sued for a lot of money. And
Yeah.
this is the liability bucket that the insurance companies would have compensated the other party from. So if he does not have anything above that 2 million and he is responsible for it, that could ruin people's lives.
Wow. So he
Yeah.
slammed right into the side of your house.
Yeah, he did. He broke our chimney and but these are simple things that could be repaired. It's just stuff. It's not people.
Right.
Yeah. So I would say the number one thing that I see in people's car insurance policies is this conversation about umbrella insurance and why it's important. I tell everybody this story. So sorry if I scare you, but that's my point. I want you to wake
Yeah.
up. But people aren't getting these conversations with folks. And in the case of one of my companies, they'll just charge you about $80 a year to double it from 2 to 4 million bucks.
Like again, I mean, $80 a year is not even $10 a month, right? We're looking at like eight or so. Quick math in my head. I don't think it's even that. So like uh, this is a no-brainer. Like it's no-brainer, right? But people have the attitude of I want the cheapest price. I want the cheapest price. It's not about am I properly protected? Do I have the right amount? I just want to pay the least amount because they're being forced to pay for these policies, right? That's the trade-off, right? You're in an industry where 100% of the people, well, maybe not 100%, because if you own your home, you don't have to insure it. That's on you. But if you have a mortgage, you do, as we talked about the last time. But for car insurance, you want to drive, you have to have insurance. That's the bottom line. So, how do we change the attitude around just give me the cheapest price, give me the cheapest price? Because all those commercials and all those ads and that old school attitude of just whatever, give me the cheapest price. How do you get around that?
Yeah, and that's a great question. And actually, we're doing it today, Angelo, thanks to you. We're trying to create awareness. We're trying to wake people up. We're trying to break that stigma of discount, pay less, and being entertained on TV by these insurance company ads.
Right.
And they talk about saving money and bundling. Well, bundling's gone on for years and years and years. What's so unique about bundling? We all bundle. What's unique is, am I educated? Do I understand what these things mean? And I get it. It's boring stuff. Before I got into this industry, I didn't really care because I never really needed my insurance until that car hit our house. And that was years ago. But we're conditioned to think the wrong thing. And we've all heard the term, you get what you pay for.
Sure. And then, you get a notification in the mail saying that your monthly Netflix bill is going to go up from 13.99 to 18.99. You're like, oh my gosh, $5 more for Netflix. Jeez. And then you just turn it on and what are we watching today? Right.
Exactly.
So it's funny how we're conditioned on certain things that we'll pay for or we'll accept. And then on other things, in Netflix, there's no customer service. They're not calling me and going, hey, sorry, but we have to raise the price. They just send me a letter and everyone's so hooked on it, they just do it. So, all right,
Yeah.
let's shift gears a little bit out of the car and let's talk about group plans. So I'll tell you in the life insurance, critical illness, disability space, there are a lot of group plans through employers. And I've always said that the group plan is the sauce on your steak, not the meal on your plate, right? If it's the kind of thing that it's a bonus if you get it, and you probably will and should, and you want to obviously look at what you have, but you shouldn't count on it because you're under the mercy of your employer, you're under the mercy of the group plan, and what's best for everybody, not necessarily what's best for you. How does it work with home and auto insurance through group plans?
Right. And I'll take us back to 7, 8 years ago. One of the first group plans that I reviewed from a lawyer, because when she passed the bar, she got a phone call from an organization saying, "Congratulations, you're now a lawyer. You get to be a part of this group plan for lawyers." And she said, "Wonderful." So when I reviewed her policy, because I said, "Send it to me, I want to see what they've done for you," she had one of the worst policies I've ever seen before. But on top of that, she was paying over $1,000 a year more than what I managed to find her. So now that is an extreme case, but ever since then, I really, really enjoy reviewing and auditing people's group plans. There's hundreds of these things in the country. You know, pick a trade, pick a school that you graduated from. You get the phone call or you get the mail.
Right.
So traditionally, what I found is that people assume that, oh, group plan, I'm going to get a lower discount. I'm going to get more discount, pay less. We already talked about what that can mean. So point number one. Point number two, if you happen to be working with a group plan through a call center, and this quite often some of the banks, we've been told, and I've been told that to make changes to a policy, first of all, the agent may not be there in several months because quite often call centers are a training ground for other parts of the company. And they get measured on how many deals they close, right? And how
Right.
short the phone calls are. But at any rate, when they're asked something different, something funky, then they put you on hold. So I've had so many people say, "I've been on hold for an hour, then I got cut off." Or I wanted to escalate, and they said, "Send me to get your supervisor to call me back," and they arrange a call, no call. I think the one that really stands out, quite frankly, was a woman who I just welcomed to our company a few months ago as a new client. She was with a group plan for about 9 years, and she had a cottage on that group plan, and she had a wood burning stove. And she said, "I want to make sure you guys have recorded. I got a wood burning stove in my cottage because I know it's a source of fires."
Well, that's one of the questions, right? We talked about that last week
Yeah, yeah.
as far as figuring out what's inside that house.
That's right. So, because she knew enough that it's important. So, on the fourth call over X number of years, they finally admitted again, "Oh, you're right. We don't have that recorded, but you would get compensated because we have errors and omissions insurance on us." So she said, "Hold on, wait a minute. So you're telling me that I would get compensated, but I would have to sue you first?" And he said, "Yes." Yeah. He also, when he came on the call, you're going to love this, because he was customer retention, right?
Right.
And he said, "Well, I assume you're leaving us because of price." And she said, "No, it has nothing to do with price." And then she went on and told the rest of the story and so on. And he gave his rebuttal to the to that and so on. So she actually ended up paying about $400 a year more to work with me than she was with the group plan.
Listen, I find people will buy based on value, but justify it based on cost.
And they don't know what they don't know. So they don't really understand the value part.
Yeah. Oh, wow. That's
Yeah. So I love reviewing group plans because I always find more than the average number of issues on those.
now in the life critical illness disability space. One thing we tell our clients is use your group plan as a top up, right? As like an extra. Can you do that in the home and auto space? Like, can I have multiple policies, one through, you, and then let's say one through my group plan, and they can talk to each other, or I can get extra benefits because of that?
No.
No. Okay. One for one. Okay. All right. So with COVID and with technology and how our world has changed, a lot more people are doing business online. So talk to us a little bit about the process, some of the benefits and some of the detriments about going through these online direct, brokers for home and auto insurance.
Right. And I'm sure you're seeing this in the robo advisor space in your industry as well, too, to some
Yeah, a
degree.
little bit.
Yeah. Well, what I found is that essentially it's the more this issue becomes self-serve, the more damaging it can be to the consumer because we just don't know what we don't know. I'm not the subject matter expert in what you do and vice versa. So essentially they're going to ask a series of certain questions and it's going to spit out some type of general tentative premium. And it's usually pretty darn low. I know when I try these things just to check, I look at it and think, okay, Well, okay, what does this number mean? So then they may get a call back from somebody to ask some filling questions as well too. So over the last couple of years, I'm seeing a little bit more of this because people like the fact that this is going to take me less time. I really don't want to spend a lot of time on my insurance stuff, but let's see what it spits out for me. And again, just like I mentioned earlier, a lot, actually, the vast majority of these policies I see are missing. They're missing coverages. They don't ask enough questions. Then they're opening people up to being vulnerable to hearing claim denied. We're going to pay you nothing, or you're not going to be reimbursed enough because you don't know what numbers make sense.
Right. Well, we also talked about it last week with the story you gave about the guy that torched his house by putting the cigarette butt out in the dry flower pot. Because the question on the application is, do you smoke inside the house? Well, no, is the right answer for this guy. But there's no follow-up question that says, do you smoke outside of the house? Right. So on an online application, you don't have the benefit of an agent who has experience to say, hey, okay, you said no, but do you smoke outside the house, or do you vape, or all these add-ons that you put. I think you called it in the details section or something like that. The
Yeah,
the the the,
the remarks.
the remarks, right? Relevant information. So, if I'm buying a policy online and I get the question, do you smoke inside the house? And I say no, and then I go outside and I smoke and torch the house, I could get a claim denied.
Yeah, so that's fine if you're willing to pay $500,000 or whatever to replace all that stuff. That's not why we buy insurance.
Right. Buy insurance to be covered, right? Not just
No,
that.
to be covered properly.
Right.
Yeah.
Absolutely. Wow.
Yeah.
Okay. Now you do a lot of work with seniors, and we've talked a lot about how seniors, they're transitioning. With retirement planning, how much insurance do I need? How much coverage should I be looking at? I don't drive as much now, or maybe I drive more because I go to Florida and I'm in another country for a few months. So talk to me a little bit about the needs of a retiree rather than a senior. Let's talk about a retiree who maybe snowbirds, isn't home. I know my dad, when he goes away, he'll just change his car insurance to theft and vandalism or whatever, and leave it in the parking garage covered. And he's not driving it, he's not putting it on the road. He's like, why should I spend the money? And I don't disagree with that. But what sort of process do you guys take retirees through?
Right. And I've got a soft spot for retirees because generally they can be considered more vulnerable than others. What I've seen over the years, actually, it can be to some degree disturbing because they've got this level of trust with their insurance person they've had for maybe decades. And they comment on how sweet they are, how nice they are, and so on. Then I get to review their policies as well. And I find there's lots of gaps and holes and they don't know. And I understand it doesn't matter how old they are, they just don't know.
Right.
So one of the examples that I saw that I shared with you earlier is that I saw, I believe it was a CBC Marketplace or one of the investigative shows on CTV or CBC, where they told the story of a senior who was diagnosed with cancer, and she went in for a procedure. And so she was hospitalized for a few weeks, and then she did some rehab elsewhere as well too. And this was in the Ottawa area, I believe. So her home remained empty. So apparently the furnace died and one of the pipes burst and it caused some significant water damage in her home. The insurance company said claim denied because you did not have somebody checking the whole house every day or every 2 days, but B, you did not shut off the water valve from the street, and C, you did not drain the existing pipes inside the house that may have had water in them that could have frozen and expanded. So by contract, they had a right to say claim denied, we're paying you zero. So the poor woman, the story goes on to say that she had to start to cash in some of her savings. So the Angelos of the world will get a phone call from a client saying, I have to start to cash in some of this stuff now. So, I mean, that's a horrible story. That's quite awful. So on top of that, I recommend that anybody who knows seniors, and if they're living on their own, especially in rural areas, to suggest strongly that they have a maintenance contract for their furnace. So somebody comes in and checks their furnace and maintains it every year, because we have some pretty harsh winters here. So we really, really need to think about how to protect our seniors.
You should have a maintenance contract on your furnace regardless of how old you are. Unless you're a gas fitter and this is what you do for a living, you should have somebody come in and check it every year because yeah, we don't live in Florida or Arizona that if the furnace goes, who cares, right? I mean,
Yeah.
have that taken care of. That's so, I'd hate to be that insurance company on that expose, named saying, took, and people will look at it from a social media perspective of, oh, look, the big bad insurance company took advantage of the poor old woman. It's really not the case. Contractually, this is what you're supposed to do. But at what point does, human emotion and uh, decency come into play here? I mean, the poor woman had cancer and she was rushed to the hospital and she was there for 3, 4 weeks, right? So, at what point does an insurance company have a responsibility as a big corporation to go, okay? Because I've heard opposite stories. I mean, I heard a story 4 or 5 years ago about an insurance company who had a life insurance contract with this guy. He kind of went low cuckoo for Cocoa Puffs, and he canceled his policy 2 years before he died. And then when he died, the wife tried to claim on the policy, and she was like, "What do you mean he canceled it? This is ridiculous. He had dementia. He was going, he was going nuts. Like no." And at the end of the day, the insurance company paid it anyways, minus the 2 years of premiums. Now that was to me, that's a very responsible thing to do, right? So what ended up happening in this woman's case? Was it too bad, so sad, or after the expose, did anything change?
In all fairness, I did not hear of any changes after the fact, but it is possible that they did give in because you're right. It becomes a PR issue. Whether it's right or wrong is one thing, but PR issue, that could impact the reputation of the organization. Absolutely right. That's why these things are perhaps more important with the moderate to large claims because that's when it becomes more expensive for an insurance company. And that's when they might start to either push harder to not pay out or may make some type of a compromise because of the PR issue. So, in my experience, I would say it might just be a kind of a case by case basis. But
Yeah.
yeah, it's unfortunate. I'd rather people understand what could happen. So maybe we're targeting the adult children.
Yeah. And listen, I'm not advocating for, playing dumb and going, oh, I didn't know, the big bad corporation, you got to pay, right? Because it's not always going to work, right? You can't bank on, you've got to take care of yourself, right? We're in a self-preservation mode here when we're talking about insurance, right? You got to
Exactly.
make sure that your car insurance is properly taken care of, your home insurance. The last thing I want to do is hit anybody and cause bodily harm, right? I mean, look, we've all gotten to a fender bender here and there. It's just stuff, like you said earlier, right? If the house burns and nobody's in it, it's stuff. We buy another one. Who cares? We build it back up again. Who cares? But when we're dealing with human lives, like, let's not ruin their life and your life twice, right? Let's make sure you've got proper coverage
Yeah.
and you go through the process. At least and then at the end of the day, if you think, oh, it's too expensive or I can't afford all that, well, now you can't say you didn't know, right? You can't say you didn't know.
Right.
Wow. Talk to me about we had a conversation in prep earlier where you kind of gave me a sly look and you said, "Do you want me to talk about commissions at all?" And I said, "Sure, you can talk about whatever you want." And I want to I've been thinking about it, over the time between prep and now, and I'm a little curious as to why you asked me that question. So, why would that be important? Why would what an agent makes be that important? I mean, because I got to buy it from somebody's going to make the commission, right? And if it's the same everywhere, why as a consumer should I care?
Okay. I'm a consumer. I've always been a consumer for decades of home insurance and property insurance and car insurance. And I think, generally speaking, consumers want to know what they pay for. So, in the case of my process, as you know, I actually audit and review people's policies and I pick it apart. I put it on a spreadsheet, 30 to 40 line items of coverages, and my best quote side by side with what they're currently getting today. And then they see the red lines that are not good. And this is a service that we are paying for every year to our brokers and agents to protect us. We just don't know whether we're properly protected until I go through this exercise with people. So envision that kind of a spreadsheet, and I actually pull out and isolate the issues I find in your house policy and your rentals and your cottages and your cars. And there may be one or two things, that may be 10 or 12 things for each of those things. And then I show people how much they just paid this past year in commission. And depending on how many red items they see, or how many potential claim denied items they see, and what they're paying for that level of service, it really puts things into an interesting perspective they've never seen before.
Right.
So I show and I tell everybody what we as brokers and agents earn per year. So for property, so that would be your detached house, cottages, rental properties, tenant insurance, it's 20% every year. And that's baked into your premium. So it's not above and beyond, it's baked
Right.
in. For cars, it is 12.5%. So it's pretty much the same across the board for all of us in the province. So I take that and I show people, here's how much you're paying and here's the quality of the work that you're paying for. What do you think? And it's very, very eye-opening depending on how many issues we find.
Right. Because the ideal policy review has no red items on the first page.
Never seen one.
Ideally, right?
I've never seen one.
No, but that's the goal, right? I mean, if you were reviewing my policy and the first page, you're like, wow, your agent got it all. I mean, that's what you want,
Well,
right?
that's Nirvana, but that so far has not existed yet. So
Right. Well, let us know when that happens, because that would be a monumentous or monumental occasion.
yes, and I actually will phone that broker and agent and give them a way to go, pat on the back, attaboy.
Nice. Or
Yeah.
girl, right? So awesome. Okay. Well, anything else you want to add? I mean, between last week and this week, there have been some horror stories. There's been lots of education. I've gotten tremendous feedback just in the short time that the first podcast was up. Floor is yours. Anything else you want to add?
Yeah, there's one thing that I want to mention too, because a lot of people really don't realize this because they don't hear this from their insurance person once they buy this stuff, is that if you ever make a claim, let's say on your house, for example, you're going to have to prove what's gone or missing or destroyed or stolen. It's called a home inventory. And you're going to be given a spreadsheet, an Excel spreadsheet, room by room, and you're going to have to populate it. Now, when there's just a few items that are gone, not a big deal. But when there's dozens and dozens or hundreds, then it becomes more challenging. And for people who have higher end stuff, like I know somebody with a woman with $10,000 worth of decorative scarves, $1,000 ottomans, $1,000 blenders, thousands of dollars in sporting equipment,
Right.
designer brand name labels of suits and outfits and shoes. You may have a challenge trying to prove that you had that level of quality of stuff and also how much of and how many of those things you had. The last thing you want is pushback. The whole point is to get more money faster.
Right.
So when I review people's policies, I mention home inventory because this is what you're paying for. So a lot of people have no idea what to do when a claim is made and so on. You got to reproduce this stuff. So it's being proactive. It's actually having this stuff listed before you need it. So I tell everybody, walk around with your smartphone. It's not fun. It's boring. Take pictures of the more expensive things. So if in the case of clothing, take a picture on the rack so you can see how many items are there because you can enlarge it, and take out the more expensive things and put them on the bed. Take a group shot and then take pictures of the labels.
What about a video? Would that make
Well,
things
they won't accept your video.
really?
No, they'll say that's, and I tell everybody videos are light years ahead of what almost everybody has, but you're going to have to reproduce it on the spreadsheet. But with the video, it's a lot easier. So in the case of electronics, take pictures of the SKUs and the serial numbers. That includes your cell phone, your laptops, your tablets. Phone is now what, $1,000 or more easily. Take pictures of your man cave high tech stuff. Open up your appliances. If you've got above average appliances, or for those who have high end appliances, open up the doors, take pictures of the SKUs and the serial numbers. I knew somebody who walked through their house. I said, take pictures of your floor coverings, your crown molding, your door locks, because you can pay thousands of dollars in expensive door locks. Your countertops, take pictures of this stuff. For people doing renos, Take pictures of the work orders and the invoices. That way, everything is saved in the cloud. It is not destroyed in the fire. That way, you've created a really responsible home inventory. It's all about getting more money faster.
And you know what? If you use your debit card or your credit card or an e-transfer, you actually have a record of it as well, right? You can go onto your online banking, whichever bank you bank with, and you can go back on your Visa or MasterCard, 6 months, a year, 3 years, 5 years, depending on how long you've had that card and what the major purchases are on there, right? Email as well. Like you do online shopping, Amazon, for example, will send an email saying today you purchased blah, 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 and show you a picture of it with the model number. Create a folder in your email and just drag that in, drag that in, drag that in, right?
Yep. And nobody is told this story once they buy their insurance. This is why we buy insurance. What do I need to do if I need it?
So when an insurance company that on home insurance is figuring out contents, do they do it as a percentage of the value of the house and just make an assumption?
Yeah, that's generally it. So it's let's say the cost to rebuild your house is 700,000, which is not to say that's what I'm going to get if I put it on the real estate market. Two different things. And then the contents or personal articles, personal belongings is usually anywhere 70 to 80% of that bigger overall number. But that's half the story. The other half is that quite often insurance companies will give you a maximum amount for certain things. So when I audit people's policies, one of the things I ask is, what is the total cost of all of your jewelry, watches, and gems if you had to replace them all tomorrow? Add it all up. The second question is other items, like I said, expensive sporting equipment, anything else that you paid a lot for, collections, artwork. And then what's the cost of the single most expensive thing? We were talking a few minutes ago about musical instruments. So companies may have a maximum amount that they will pay you. Bicycles. I just recently did a social media piece on bicycles. Quite often, companies may give you $1,000 for a bike. I know people with bikes with $6,000, $7,000.
Yeah.
You want to be paid $1,000 and be out of pocket 4, 5, 6 grand. You got to have these conversations.
So when it comes to the amount, then, so let's say, for example, my house is $1 million and you said 70 to 80%, they do a calculation for content. So they say, okay, Angelo, your house is, it's to rebuild it, it's $1 million. The contents will do 700,000. And I'm just using these numbers because it's quick math in my head. So if my house burns down and everything's destroyed, they don't just cut me a check for 700 grand and go refurnish your house. I have to show them each thing. Is that how that works? And go, okay, I bought my table, it was X. I bought chairs, it was X. I bought this, I can't buy that again. Like that was a limited edition thing. You can never find it again. Like how does that work? They just give you the value of it and
Well, they will cut that big check, but for certain items that are worth more than what is considered the average amount for that kind of thing, they may ask you some more questions.
okay.
That's why it's important to have a record of some kind of those things.
Right.
Yeah.
Well, it's like anything. The more detail you have, the more proof you have, the more paperwork you have, the easier things are going to be. I remember after my triple bypass and I was filling out the forms for my critical illness insurance, it was detailed. It was like boom, 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 boom. I added 2 or 3 pages to that form I had to fill out. And the lady on the phone actually said, wow, we've never seen anybody go into this much detail. 3 weeks later, I had the check in my hand. So, hey, you know what? I didn't want any sort of hang up or misconception or anything.
And when somebody's a victim of a robbery, quite often the thieves go up to the master bedroom and start looking for jewelry. I remember talking to somebody a number of years ago who said, I couldn't think of anything else that was stolen, so I signed off on the last check. And then a few months later, they just discovered something else that was stolen. You can't go back and ask for more. You signed off on the last check.
Oh boy. Yeah. So if you have an itemized list, you can always cross-reference and go, okay, yeah, here's the Picasso, here's the Monet, yeah, here's the big ruby diamond or ruby ring, so, and if something's missing, you go, okay, that's missing, that's missing. and that's missing, right? So
That's right. And the claims adjusters love that because they rarely ever see one of these things. So the faster they get your file satisfied and signed off their desk, everybody's happy.
do you have a template for something like this?
There's a lot of free ones on the internet. Just Google home inventory and pick one.
Okay, great. Maybe we'll put a link in the description below and people can have at that. So awesome. Well, let's say we wrap up with a few more rapid fire questions. You know this is coming.
Go for it.
So tell me the last show you binge watched and you loved.
Oh, we're watching Mr. Mercedes right now on Netflix. It's based on a Stephen King series.
All right. So what'd you put in your smoothie today?
Oh, let's see. About 5 different kinds of berries and some green stuff.
Any protein powder?
I believe so, yes. I guess the worse they taste, the better they are for you.
Yeah, well, I love my shit. So rock and roll. What's the first concert you went to?
Bachman Turner Overdrive at the old CNE Stadium, 1975.
Very nice. How do we book an appointment with Larry Hoover for a policy review?
Yeah, just send me an email at larry@policyreviews with an S on the end, .ca. larry@policyreviews.ca.
Awesome. Well, I asked you last time if you'd come back and you did. And I'm asking you again, if something comes up and we can do another one of these, will you come back?
Oh, it'd be a pleasure. Thank you.
Awesome. Well, there you have it. Larry Hoover with more horror stories and more information on why you need to have better home and auto insurance, have your policies looked at, get those policy reviews done. My name is Angelo Mancios, and you've been Behind the Vault.
Hi, everyone. Thanks again for joining us for another episode of Behind the Vault with Angelo. This was part 2 of crazy stuff regarding home and auto insurance. Love to be able to work with you. Give me a call sometime. You will see where to find that stuff right here. You take care. Bye now.